Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Tuesday, the 28th of April, 2026, and markets are on the move ahead of today's U.S. Open. In today's video, I'll break down everything that you need to know, including a special look ahead to tomorrow's FOMC meeting, which could be an interesting volatility event, even if the Fed is unlikely to change interest rates. Let's get into it. We saw a headline ahead of today's U.S. session that Iran has storage for about 2 to 3 more weeks of oil production until it has to start shutting off its wells, which can damage them and lead to a longer supply disruption over time. And that has led to rising oil prices and falling indices. This is a common theme that we've seen, of course, over the last 9 weeks. Though just as I was starting this video, we got news that the UAE will be leaving OPEC at the end of this week. The implications for the oil market are still up in the air because the UAE is already pumping at full bore. But if it does lead to a dissolution of OPEC over the longer term, perhaps that could bring some more supply onto the market. Nonetheless, oil prices remain higher on the day, and that is weighing on risk appetite as we head into U.S. trade. The main focus, though, of today's video is the FOMC meeting. Of course, no change to interest rates is expected, but this will be Fed Chairman Powell's last meeting in all likelihood as the chairman of the Federal Reserve. And the key question for me is whether he stays on as a board member. His term as chairman expires in May, but he can stay on the board until 2028. And if he does, that could complicate matters for his successor, Kevin Warsh. And just add one more centrist to the Federal Reserve, and all else equal, the longer he stays on, the more likely we could see higher interest rates than otherwise expected. So I'll be watching for comments from him in his press conference about his future plans as the main event around the Fed meeting tomorrow. Other things to keep an eye on are any tweaks to the statement. Perhaps the Fed could move to a more balanced statement instead of the more dovish one that they've been leaning into of late. And then as we start to look ahead to the new Fed chairman, Kevin Warsh, there could be big changes at the Fed, including eliminating the dot plot, maybe fewer meetings. Things like balance sheet reductions have been mentioned by Kevin Warsh. So there'll be a lot to discuss as we move through the summer with the Federal Reserve. But the main focus for this week's meeting will be the future plans of Fed Chairman Powell. So as I noted, there's no change expected for this week's Fed meeting. This is the CME FedWatch's tool looking out to the end of the year, all the way to December, the first 5 meetings or so with Kevin Warsh. And still, the majority of traders are expecting no change to interest rates across the entire year. Of course, rising oil prices could raise inflation and play into that as well. We'll see if indeed there are any changes to interest rates for the rest of the year. But for now, this is something that is playing into the US dollar as well as all other major currencies, because we've seen big shifts across all of them toward higher for longer interest rates to address the energy shock. And today's chart of the day is the Australian dollar versus the US dollar. I've mislabeled this, so please don't look at that label here. It's the Aussie dollar, but it is on a 4-hour chart where you can see Aussie's carved out a bit of a 4-hour bullish flag pattern. It was pulling back in a very gradual, controlled way, now broke out of that flag pattern, and what bulls will want to see to signal more upside possible for the Australian dollar, maybe around the Federal Reserve meeting, maybe around some Australian inflation data later in the week, would be a break above 72.10. That is the highest price that the Aussie has traded at for months, if not years, and a breakout there, especially after this bullish flag pattern, would be a very bullish sign for this currency pair moving forward, could clear the way towards 73 or 74. Meanwhile, a break below 71.10 could shift the bias more to the downside here in the Aussie. So that's kind of the 100 pip range that I'll be watching as we move through the rest of the week with this key risk sensitive pair. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one quick favor before you go, please do just drop a like on this video. It's a free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.